Okay, so it's another strong morning for the equity market, and we owe that to what's happening in the commodity market. Manisha Gupta is joining in with a roundup. Manisha, I know that commodity bulls wouldn't be feeling great, but I think the equity guys are rejoicing with the fall in oil.
Well, somebody's feeling good is good enough for me. So starting with the crude, yes, we have seen a very sharp decline in the markets in New York session yesterday, trading quite flat in the Asia right now. But then we have lost nearly 7 to 8% of the crude value in last 24 hours itself. And we still are adjusting in the Indian markets with that. Add to that the bit of a rupee appreciation that also is the result of the crude prices decline. And that's working its way into the prices. Well, the equity markets have been on a unstable foot. And we also have seen a demand concerns for 2019. The expectation is that the global crude oil demand growth for 2019 is going to be lesser than 2018. And with the kind of supply surge that we are seeing coming in from US at record production, Russia, and same is the case with Saudi Arabia, all of that clearly is pulling the prices down. And as we've been telling you that the output cut from OPEC and allies will happen, but that is from 1st of January. And until then, the supplies continue to increase, and that's pulling the prices down. There also are demand concerns now arising out of Asia and Europe. The economic data has been on the weaker side, so nothing really working in favor of crude. And then you have the speculative long positions being unwinded ahead of the festival week, which begins from next week. So it also is a case about lesser volumes and exaggerated prices, and that also seems to be doing its work there. The US dollar index is trading at a one-week close ahead of the Fed meeting announcement today in the evening. It is expected to be slightly bearish for the US dollar, and that has been supportive for the gold and silver prices in the global markets. So while we are holding around 5-month highs for gold in the global prices, the Indian price is under pressure. That is because of the rupee appreciation, and quite a hefty one at that we have seen in last couple of sessions. The base metal prices have their own concerns. We did see the copper prices decline to a 3-month lows, a bit of a bargain buying on your screens. Nothing much to read into that because the Chinese president did not give out any sense on the stimulus or measures to contain the economic scenario there. And then, of course, the US-China trade concerns haven't given you any optimism there. The markets also continue to read into the global equity sell-off. That's yet another thing that's bothering. And the global investor confidence is at a decade lows. So whichever way that you look, we are looking at further pressure building up in case of the base metal prices also. So everything down 0.25% to 0.5% on your screens yet again for that. Trading strategies, and we have them from Kuvarji Group. They have a sell call continuing in case of the nickel prices, targets that one for 742. They also have a strategy coming in for the energy space. Natural gas is a buy with targets of 269 for the day today.
Okay, the mid-cap index is really firing on all cylinders now, 150 points higher on the index. And look at some of these NBFCs. Cholamandalam is now up almost 5%. Manappuram Finance is up about 4%. That whole lot. Indiabulls Housing, of course, tops that list. So looking very smart for the mid-cap index, especially the NBFC names.